If you drive for Uber, sell on Etsy, or freelance on Fiverr, and you take 1099 payments, this video is for you. In 2023 alone, 14 million Americans were hit with IRS underpayment penalties. The total bill was $7 billion. Not from cheating, not from fraud, from missing quarterly tax payments. And if you are self-employed, you are in the highest risk group by a wide margin. By the end of this video, you will know the 4 exact deadlines to hit, the 3 legal safe harbors that eliminate your penalty entirely, and the 1 calendar trap that catches even experienced freelancers every single year. The Q2 deadline alone has a built-in error that costs people $350 or more in a single quarter. Let me show you exactly what it is. Quick reminder before we get into the numbers. This content is tax education, not personal tax advice. The rules here apply generally, but your situation may be different. Always run your numbers by a licensed CPA or enrolled agent before you file. When you are self-employed, you owe 2 separate taxes: income tax, just like everyone else, and self-employment tax. W-2 employees split Social Security and Medicare with their employer, each side paying 7.65%. As a freelancer, you pay both halves yourself. That is 15.3% of your net self-employment income. On a $60,000 net income, that is $8,478 in self-employment tax before a single dollar of income tax is added. And it kicks in at just $400 in net earnings. There is no minimum exemption. Who actually has to make quarterly payments? The rule is simple. If you expect to owe $1,000 or more in federal tax after withholding and credits, the IRS requires you to pay 4 times a year. Miss a payment, or underpay one, and the penalty clock starts immediately that same day. Tracking whether you hit that threshold is exactly what PreFile Check helps 1099 filers manage, and I will show you how it works before the end. The underpayment penalty is not a flat fine. As of Q1 2026, the rate is 7% annually, compounded daily. A $5,000 underpayment held for a full year generates $350 in penalty interest, and it does not wait until year-end to hit. Miss Q1, and the penalty starts running from April 15th. Miss Q2, and a second penalty starts from June 15th. 2 separate calculations, stacking against you at the same time. 4 payments, 4 deadlines. Q1 covers January through March, due April 15th. Q2 covers April and may only due June 15th. Q3 covers June through August, due September 15th. Q4 covers September through December, due January 15th, 2027. Mark all 4 now. Missing any one triggers the penalty on that quarter's underpaid balance individually. And notice what I just said about Q2. I will explain that in a moment. Q2 covers only 2 months, April and May. Not a full 3-month quarter. This is one of the most overlooked facts in all of freelancer tax content. Most people divide their annual tax bill by 4 and pay equal amounts each quarter. That logic fails for Q2. You are underpaying by an entire month of income. The IRS calculates the Q2 penalty separately. The penalty applies to that specific underpayment, regardless of what you pay later in Q3. Here's the relief. There are 3 legal rules that wipe out the underpayment penalty entirely. The IRS calls them safe harbors. Hit any one of them, and you owe 0 penalty no matter what your final tax bill turns out to be. Let me walk you through all 3, because the third one contains a hidden trap that most freelancer tax content misses completely. Safe harbor. 1 is the simplest. If your total tax owed after withholding and credits is less than $1,000, no quarterly payments are required at all. For freelancers who also hold a W-2 job with withholding, this may already cover you. Run the Form 1040s worksheet first before you assume you owe anything. The worksheet is free at irs.gov and takes about 20 minutes to complete. Safe harbor. 2 is the 90% rule. Pay at least 90% of your actual 2026 tax liability through estimated payments and withholding combined, and you owe no penalty. The risk is real, though. If your income is unpredictable, hitting exactly 90% is hard without a precise estimate. Guess low, and you miss the harbor. That is why most experienced freelancers rely on the third safe harbor instead, because the math is already done for you. Safe harbor 3 is the safest strategy of all. Pay 100% of what you owed on your 2025 tax return, spread over 4 equal payments in 2026. You already know that number. It is on your 2025 Form 1040, line 24. Divide it by 4. Pay that amount by each deadline. No matter how much your income grows in 2026, you are fully protected from the underpayment penalty. But there is one exception that most content never mentions. If your 2025 AGI, your AGI, was above $150,000 on a single return, the 100% rule does not protect you. You must pay 110% of your prior year tax to be safe. A freelancer who earned $80,000 in 2025 and grew to $120,000 in 2026 can pay exactly 100% of their prior year bill and still owe a penalty. That is the threshold most content skips entirely. Check your 2025 AGI before you choose this strategy. This calculation gets complicated depending on your filing status, income sources, and any state-level rules that apply to you. Before you finalize your payment strategy, work through these numbers with a licensed tax professional. They can run the exact calculations for your situation and flag any state-specific requirements. Quarterly taxes assume your income is steady, but what if you are a wedding photographer earning most of your money in Q3 and Q4, or a tax professional with nearly all revenue in Q1? Equal payments do not match unequal income. You underpay the big quarters and overpay the slow ones. The IRS has a solution built for exactly this. The IRS solution is called the Annualized Income Installment Method, available on Form 2210, Schedule AI. It lets you match your payment size to your actual quarterly income with no penalty. But here's the practical move for most freelancers. The moment a client pays you $3,000, move $750 to $900 immediately into a separate savings account labeled for taxes. Pay yourself the net amount. Do not wait. Do not mix those funds with your operating account. That money was never yours to spend. Let us talk about how to actually send the IRS your quarterly payment. There are three main options to choose from. The first is completely free with no registration required. The second is also free, but needs a brief setup done in advance. The third automates the math and tracking at an annual cost. Here is what each one does and who each one is best for. The simplest option is IRS Direct Pay at irs.gov. Enter your bank routing number, select estimated tax, and the money is debited directly. No registration, no setup, no fee. Cost is $0. This is the recommended default for most freelancers. Here is the catch, though. You have to remember to do it 4 separate times per year. Nothing sends you a reminder. The second option is EFTPS at EFTPS.gov, also completely free, but unlike IRS Direct Pay, you must register in advance. Allow up to 5 business days for your PI to arrive by mail. The advantage: you can schedule all 4 2026 quarterly payments in January and never think about them again. Best for freelancers who want a set it and forget it system. Here is the catch. The registration window trips people up when April 15th is 2 weeks away and they have not signed up yet. The third option is QuickBooks Self-Employed at around $180 to $240 per year. Verify pricing at quickbooks.intuit.com first. Unlike the free options, this tracks income and expenses in real time and estimates your quarterly payment from actual data. It logs mileage through GPS and integrates with TurboTax for filing. Best for 1099 earners over $50,000 who want automated tracking. Here is the caveat: the price adds up monthly, and it has changed before, so always confirm before you commit. Here is something most freelancers do not realize. Every legitimate deduction reduces your net self-employment income, which directly lowers your quarterly payment. Industry estimates suggest independent contractors miss an average of $3,000 to $5,000 in deductions every year. That is real money that did not have to leave your account. Finding those deductions before you file is exactly what PreFile Check is built to help with. Link is in the description. 2 deductions every freelancer should verify. Home office. A 200 square foot workspace in a 1,600 square foot home is 12.5% of your rent. On $24,000 annual rent, that is a $3,000 deduction. Business mileage. The 2026 IRS rate is 72.5 cents per mile. 5,000 business miles is a $3,625 deduction. Together, those two reduce your quarterly payment by $300 to $900 depending on your bracket. Are you tracking both? Before your next quarterly payment, take 15 minutes and check your expenses with PreFile Check at prefilecheck.com. It is built for 1099 filers. It shows what you are tracking, what you are missing, and whether your estimate is safe. One question for the comments. Are you going with a free tool like IRS Direct Pay and handling it yourself? Or would you pay for something that automates the math? Drop your answer below. If this helped, subscribe so you do not miss the follow-up. The next video covers SEP IRA contributions and solo 401k limits for freelancers. That one move alone can cut your taxable self-employment income by thousands of dollars. 4 payments, 4 deadlines, 1 safe harbor. That is the whole system. See you in the next one.